As ICICI Bank, of course, reports their numbers tomorrow. But let's talk about IndiaMart. That's the company, the stock of which is on our radar. There's an upgrade coming in from one of the brokers as well. For the third quarter, it was the third straight quarter of addition of paid subscribers remaining muted. We have with us the management joining in, the CEO at IndiaMart, Dinesh Agarwal. Thanks a lot, Dinesh, for joining in. You know, one of the concerns that the street had was that you stopped giving guidance for 2 consecutive quarters about subscriber ads because of the churn. You had said that this number could, normalize to around 7 to 8,000 per quarter by the end of quarter 3. So I just wanted your thoughts on that. And do you believe that subscriber additions have bottomed out as per, what you're seeing on the ground?
Yeah, so last year, if you see FY23, we added almost 32,000 or 33,000 customers, which was highest ever in our history. And our anticipation was on the churn side at the pre-COVID level, but churns are a little bit higher than what was expected, and that is resulting into lower customer addition for the past 3 quarters. You are right, mostly it should be bottomed out at 2,000 customers per quarter. And as I said earlier also, it will take us 2 to 3 quarters to find reasons and fix, because these are small things. As we have grown rapidly in the FY23, small reasons to be fixed. The good part is that gold and platinum customers continue to pay us higher revenue, and they continue to upgrade, and their revenue contribution is close to 75%, and they contribute about 50% of the total customer base.
Right, Dinesh, good morning. Thank you so much for joining in. So I'm quoting you from a brokerage note which says that IndiaMart is expected to add around 5,000 net paying subscribers in the 4th quarter, which is the current quarter, and around 4,000 in the 1st quarter of FY25. What is your assessment as of now, considering the numbers that you have seen over the last 3 quarters? Do you see these numbers taking shape over the next 2 quarters?
I mean, these are uncertain times, and that is why I'm not committing any numbers. The quarter 4 is generally good. You are generally, the market is also better in quarter 4. So I'm hoping that it will be definitely much better than 2,000 that we added in the current quarter. Commenting anything about the quarter 1 of the next year is too difficult for now.
So one thing you can say with certainty is that this 2,000 number has bottomed out. What you can't say with certainty is how much it will improve to. Should we read it like that?
Yes.
Okay. And collections, after 4 years of 25% plus sort of growth, it's increased to just about 17% this time around. What is the expected sustainable trend? Does it slow down from here, or does it remain at this 17-18% mark?
See, after many quarters of upwards of 20-25% collection growth, this is the first quarter that we have witnessed the 17%. I would still say that it's a one-off, as we have always maintained that we want to remain a 20% plus growth rate company, more towards 25%. Since the customer growth has muted, there could be some reasons on that. And also October, November, December is a more holiday days, and that's how also it should be read. So we would like to maintain that at least for now, we would be targeting 20% upwards of the collection growth.
But in your earnings call, Dinesh, you mentioned that you're expecting similar seasonality in the 4th quarter as well. You're expecting around 7 to 8% of ARPU growth and 15 to 18% of customer growth. Are you seeing those trends on the ground over the last 3 weeks of the new quarter that you have seen, that you can get to these targets?
I think you are misreading. Most probably that's a longer term guidance that is there, which is based upon the past many years. If you see, our growth rate of about 25% has come in from 7-8% of the ARPU growth and from 16-17% of the customer growth. Ideally speaking, we would like to maintain that. Unfortunately, that we have not been able to do that in the last 3 quarters. Until unless we are able to fix that, I won't be able to comment. But in the longer term, our target is remains in a very similar trajectory as we have had in the last 5 years.
Let's talk about your margins then. The margins in, of course, this quarter were impacted by the 1 month salary hike impact that came in. Close around 28.1% is what we saw. Just wanted to know what your margin outlook for the fourth quarter and the foreseeable future is, because you are onboarding sales team in your payroll. You're also, looking to reduce some of the silver offerings that you have in tier 3 and tier 4 cities. So there will be a revenue impact, there will be a cost impact. How do you expect margins to play out in the near future?
So on a like-to-like basis, I think margins will remain in the similar range. As we have guided earlier, on the standalone basis, we target 30% margin. In the quarter four, what happens, the collections are upfront, and quarter four is generally very high. So we will see some cost being there, and quarter four margins, that's why on the revenue terms always comes lower than the quarter three, and then again it improves in the quarter 1, 2, 3.
All right, Dinesh, we'll leave it at that. Thank you so much for joining in and sharing your thoughts on the numbers, and wish you good luck for the times going forward. That was the management of India Mart. Confident that the customer addition has bottomed out. Didn't share a number, but is confident that Q4 will at least be better than the third quarter. The stock is also up and about at 6% higher now at 26.34. Time for a short break here on Chartbusters. We'll get you more on the markets and stock-specific action on the other side. Stay tuned. We'll be right back.